What's up, guys? I'm Nick, and I'm here to teach you guys about how to value the market the right way using the Buffett indicator. Before I get to it, could you please just smash that like button in exchange for this valuable knowledge I'm going to be giving you today. Smashing the like button helps my videos rank higher on the YouTube algorithm so that I can reach more great viewers such as yourself. In my previous video, I promised that I would teach you guys about the market indicator that has never been wrong. So let's dive right into it. So, I want you to imagine the size of our US stock market. Think about all the money that is in all of the stocks. Could it be worth 100 million? Maybe a few $billion. Ha! Guess again. As of February 11th, 2021, the stock market here in the USA has a total value of $49.5 trillion. It's clearly no small coral reef. We got a big ocean out there. That is so much money that Jeff Bezos plus Elon Musk plus Warren Buffett together only makes a 0.5 at the end of that $49.5 trillion in the stock market. In other words, that's a ton of money. Now, let's think about all the money from goods and services in the United States. That's the GDP of America. That's got to be way more than the stock market size, right? It is, after all, the combined profits of everyone in our entire country. The stock market just happens to be bigger. The GDP of America is $21.7 trillion. Are you guys thinking what I'm thinking? Let's compare the sizes between the GDP and the size of the US stock market. So by dividing the worth of the stock market in the United States by the US GDP, we get a value that is approximately 2.28. This means that the US stock market's value is 228% above the US GDP's size. The exponential trend line shows that when the stock market is 120% above the GDP, it is fairly valued. Basically, our market is way above its fair value, and it is about time for a considerable drop. There's kind of a strange phenomenon about this, is that coronavirus just finished happening. So what is all that? Why are we not in a bigger correction right now with COVID on the loose? If you look at the trend line of the S&P 500, you'll notice that the coronavirus barely did anything to our economy over the long term. We already completely surpassed its fall and even went beyond it. COVID was a small correction that only bought us a few months. I expect a considerable crash sometime in the next few years, but I do not fear it. I actually don't mind a market crash at all. You might think I'm crazy, but I'm serious, and if you watch this video, you'll know why I'm not afraid and even don't mind market crashes. Now that you probably understand the Buffett indicator, my purpose for this video is complete. If you haven't seen some of my latest videos on the stock market, I definitely recommend you watch some of them. They have very valuable content, and if you subscribe, you'll get to keep track of all of my latest videos that are being uploaded very often. So do that. My next video is going to be especially fun and interesting, so make sure that you stay tuned for it. Alright guys, see you on the next one. Alright, I'm serious. Subscribe and watch one of these two videos. You won't regret it. They're both great. Alright, see you on the next one.